Let's look at the NASDAQ. First off, read this disclaimer carefully. Then do your good deed of the day by liking and subscribing. The reason why the QQQ is very interesting is because you have the T, QQQ, if you are feeling bullish, which gives you leverage, and the S, QQQ, if you are feeling bearish. So yeah, very, very tradable. So yeah, here's the QQQ. There's of course options as well. Yeah, the key thing with the Qs now is that we have a very big bullish move. And, of course, this is good if you have a bullish position. But this is historically not like an ideal time to enter new bullish trades. Looking at the dailies, and when we go back in time, you see that usually, yeah, there is some give back to the Nasdaq. It doesn't just go up. That's so there's currently a bit of an anomaly. So yeah, let's look at some of these indicators here. So looking at the MACD now, it's one of the highest MACDs we have seen, meaning the bullish momentum is very strong, but it's abnormally strong. Looking at the RSI on the weeklies and also the PPOs here, we are very, very far from the moving averages reflected with the PPOs, and the RSI is very, very, very high. While that doesn't mean it's impossible to go higher, it means that the odds are certainly reduced. When we go to the dailies, it's really high. I mean, there's no other way to put it. Like, this is a very, very high RSI. So then you have to ask the question, okay, what happened before when we had this kind of RSI? Back here, this is the last time. We did actually go up 2-ish%, but then we did see a very substantial correction. What is the before that? You have back here in the 20s. Okay, that was this rally here. So from the 2020 lows all the way up here to the highs of September, we had a very strong rally, but then you did actually get a very aggressive sell-off. So let's actually play a bit with the percentages here. So if you were like nailing the lows here, all the way up to this point, that is, it's 84%, no, 83%. But if you got into some trouble, let's measure it from here. Down here, it's 57%. That is from like the same low. Down here, it's 70%. So gains, they can, disappear quite quickly when there is like a very excessive euphoria in the market. And so that's the key thing here. Like, obviously, the bulls are in control. That's clear. But you have to ask the question, okay, what are the probabilities going forward? Because that is what, investors do. Either you assume uptrend or a potential downtrend. And the NASDAQ here is really high. So going into my notes here, we are definitively overbought, especially here on the dailies. I think I will give a -7 here to the bears. It's really high, really, 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 really high. When we then go into the seasonality here, you see to the left the last 5 years in green, the last 7 in blue, and the last 10 in red. The seasonality is bearish into 5th of July. Looking at the table view, so far we do have a 5.6% gain for June. The table view shows us that July is very, very, it's a very bullish month. It just is, it's a strong month for the NASDAQ. June, as you can see, is more mixed. This June has been one of the better ones for sure. So if we look at some of the other like great Junes going back to 2004, we see that, in 2012, June was very good, but May and April were bearish, meaning there was a pullback right before the strength of June and July and also August of that year. Going back here to 2019, June was very strong, but May was a weak month. So there was a pullback, cool down of RSI and other indicators in May, which set the condition for the strength of June. July was strong, then give back in August. When we then go back here to 2020, it was a very different period because we were so low, right, due to the lockdown. So that was a bit of a different year. But in that case, you definitively had strength in May, June, July, and August. But then you did get that give back. 2021, a very strong June, give back in May, then continuation into July and August, but then give back in September. 2022, last year, then June was very weak. The two preceding months were weak, very strong July, but then give back in August and September. Which now takes us to this year. Okay, March, strong. April, decent, but not really a give back month. Very strong May, and then you have June. So based on all the data we have here in the table view, the odds do certainly favor a pullback. Especially given that the year that was, a very bullish year to compare ourselves with was 2020. You could also highlight 2009, but that was after a very substantial bear market, so the condition was very different. It's important to just be aware of the relationship between the price of a security and where it can go vis-a-vis the total market cap the index represents. So when you have the lows here of 2020, it takes less money for it to go up than when we are here, where the market caps of the companies and so on and so forth is just way more substantial. So it needs a lot more money to lift the boat. The boat sort of has become so much bigger that it needs more money to rise. Yeah, but given all the data we have here on seasonality, it's very hard to become bullish. I think I will give the bears -5. I would have given them a bit more if it hadn't been for the typical strength of July. But when we did more of a deep dive into the table view, it was pretty clear that the most likely outcome is a bit of a pullback. That has been the trend for NASDAQ: strength, pullback, strength, pullback. So let's compare the NASDAQ with the S&P 500, QQQ versus the SPY. So yeah, let's go here to performance. Year to date, 38% versus 15% for the S&P 500. So more than twice the performance. Beta 1.11 versus 1 for the SPY. PE 22.7 versus 17.9-ish. Dividend 1.48% for the SPY and 0.60 for the QQQs. Holdings 102 versus 504. You see that there are a lot of these stocks that are represented in both. You have like Microsoft, Apple, Nvidia, Tesla, Alphabet, Meta. There are these companies that certainly repeat. So even though the SPY is not a tech ETF as such, you see here that in practice, you see that 19% is tech services, then 18% electronic technology, health technology is 10%. So the total amount of tech in the SPY is pretty substantial. So going back here to the fundamentals, is this like a value place for the NASDAQ? Definitively not. Yeah, I think I will give a -6 here on the fundamentals. So one of the things we want to figure out first here is the tradability of these leveraged ETFs. So let's do that first, and then we can do some other type of analysis. So TQQQ, that's if you are feeling bullish. Then you have the SQQQ if you are feeling bearish, like that. Okay. So long term between the QQQ and S&P, we have 90%, so pretty strong correlation. TQQQ 91%, which is decent, with the SQQQ a -63%. So there's a very substantial divergence here between the index and the SQQQ. if the SQQQ tracked the QQQ really well, we would see like a minus 90% plus correlation, but we don't have that. So there are definitively some tracking errors. Looking short term, 92% positive correlation with S&P 500, almost perfect with the TQQQ, minus 97% with SQQQ. So short term, they definitively do their job, but long term, you could make some case for holding the TQQQ over multiple days, but the SQQQ is more dicey for sure. Okay, but let's now compare against some alternatives. So one of the alternatives to the NASDAQ would be the SMH, that's the semiconductor ETF. And it's been some time since it's been in the news, but you did have the ARK Innovation ETF. Let's look at, okay. 91% positive correlation with SMH, semiconductor ETF, 44% with the ARK Innovation ETF, long term, short term, 96% with SMH and 72% with ARK-K. So what happens with the SMH is certainly going to affect the NASDAQ. So here's the semiconductor ETF. I mean, it is potentially on the verge of a breakout. However, the context here is not that we have like a consolidation and then we have the breakout. We have like a very high RSI, and on top of that, we are going to have a breakout, potential breakout. It's not the type of breakout setups that I prefer. I like, a bit of a rounding bottom, maybe some consolidation before the breakout. And looking at MACD, RSI, PPO, we are really, really high. Doesn't make it impossible to break out successfully, but it makes it more difficult. Daily data points. Let's load the data. Yeah, very high RSI and also PPO. And let's look at the MACD here. No, wrong, not there, but there, and then expand. Yeah, so this is the highest MACD we have had in this entire time frame. So going back to 2013, we just haven't seen a MACD like this, meaning the bullish momentum is completely out of the ordinary. It's just not a thing. Seasonality for the SMH is bearish, as you can see here to the left. Looking at June, 7% for June so far, which makes it, it's the third best June ever. 2020 was better, and 2019. But in 2019, we had a substantial cool down before the strength of June and July. When it comes to 2020, that was this other year where you did have the lockdowns and all of that. So the context was definitively rather different. Yeah, let's now compare the QQQs with the SMH. SMH, semiconductor ETF. So we are pretty low on the RSI. We have a massive, like, a very advanced topping pattern here between the two. So the QQQ has substantially underperformed the semiconductor ETF. Looking at the dailies, it's just a very clear bearish trend. Seasonality. Seasonality does have a bit of a tendency, though, to favor the NASDAQ here into later July. When we look here at having a look here at the table here, you do see that July has a tendency actually to be a bit bearish here for the NASDAQ, meaning it has a tendency to underperform the SMH. It might be a bit confusing looking at the table view here to the right that looks bearish, and then you see to the left here that like in red over the last 10 years and it looks bullish. But I drawed in with this measurement tool the period from the beginning of July to the end of July, and you can see that it actually is very flat. So it might look bullish, but you see that there's a tendency to have a bit of a rally and then a give back. But yeah, let's go to relative performance. Yeah, I think I'll give -4 in this case. So we end up with -5.5 in favor of the bears. We are definitively overbought. But then again, the bulls are still in control. So what does that mean? Well, it means that they are in control. It means that they have a lot of momentum. We saw that the MACD has set some very strong records. However, that doesn't mean we are going to the moon. That's the thing. We have seen this movie so many times. It really pays to be a contrarian. But if you are going to be a contrarian, it's very important to also use stops, because given that the data now supports a short of the NASDAQ with the SQQQ or other bearish tactics, of course, if you would buy the SQQQ, you wouldn't short the SQQQ. But anyway, bearish strategies makes most sense. But if for some reason, right, the Nasdaq is going to go even higher and set even bigger records on various indicators, that could open up an even better opportunity for a bearish trade. But it's easier to make that extra trade if you got stopped out of a trade that wasn't perfectly timed. But yeah, whatever you do, of course, you do want to have like entry signal, a stop loss, and go to diamondarm.com for more.